The central bank has lifted limits on foreign exchange transfers, effectively indicating that a dollar shortage that has hampered economic activity for years now is easing off. The announcement allows banks to push through transactions that were previously capped at about 100,000 or so, shortly after the 2011 uprising. The crunch eased after the central bank floated the pound, the Egyptian pound, in November. And Egypt also secured at the same time a $12 billion international monetary fund loan that helped to attract foreign investors back into the country. Reserves have gone up by 9% in May from the previous month to about 31.1 billion. That's the highest level since February 2011. The central bank had already allowed commercial lenders to start repatriating dividends and eased restrictions on the use of debit and credit cards abroad too. Ever since the floating of the currency, the pound has weakened by about half against the dollar, causing inflation to spike though to its highest level in decades. All right, then, so let's get the latest on this policy change from Yasser Hakim. He joins us now live from Cairo. Yasser, good to see you. Let's start with these restrictions that have been lifted today. They apply to importers, but are there still other capital controls in place, or are these the last ones?
No, it's one of the last, if you may say. Even businessmen can now easily repatriate their money out of the country. And this is not because of the CBE decision that took place on Tuesday today, but actually it's part of the new investment law that aims to facilitate the environment for businesses in many forms. And one of them is the ease of money transactions and bringing money into the country and taking money out. Obviously, there's a $10,000 block or limit on taking the money out of the country on a personal basis. But for traders and companies, they can have transactions with whatever amount they feel, whether getting in or out of the country, as long as the banks themselves have the means to withdraw the money for the client. So if the bank has that, there will be no problem. The thing is that for the last few months, it has been eased, not theoretically, but practically. But many banks would not have the amount available and would tell you if it's a huge amount, we're talking millions or hundreds of thousands of dollars, then you would have to wait. But right now, theoretically now, anyone can have any transaction at any cost.
Indeed. So what effect, though, is this likely to have on the exchange rate, especially now that, as you pointed out, importers can move around just about as much capital as they please?
It shouldn't have much, although practically someone would think that because of this decision, there will be a demand on the dollars. But however, there is something called the tariffs exchange rate. So the government has put an exchange rate for tariffs and for imports. And that was according to demand by the importers, because after the devaluation of the Egyptian pound, it fell very hard, and then it started moving up and down at quick levels. And this caused problems for importers, because when they sign a contract, it's at one price, and then when the amount comes into the country and they start selling in the country, it's another totally different price, and it was a big hassle. So the government has put a tariffs import exchange rate, and this one is interchangeable every month or two according to the market. It's been stable for 2 months, for example, at 17.65. So this will not affect so much the dollars, the exchange rate, and especially that even the government has provided all the clients with all the dollars they need, around $18 billion in the last year. So there's no sort of shortage of hard currency for importers to have to run at black market, for example, or have to look at other sources. They can just easily go to the central bank or any bank to get the dollars they need.
Right, one last question for you, Yasser. The Egyptian pound has been floated for at least a year now, just over a year in fact. Inflation is starting to ease a little bit. The Egyptian pound relatively stable, around 17.65 since August. But for ordinary Egyptians, do they feel like the last year or two of very painful economic reforms, do they think it's worked in their favor?
No, not yet, to be clear. Obviously, these painful measures, one of the most painful parts of these painful measures is the the huge increase in the price hikes because of the inflation. And the numbers we're talking about, although they're stable now, like you said, at 17.6 the dollar, the Egyptian is stable, but it's stable at a very high cost. It's a very high kind of exchange rate, which makes prices very high for the normal Egyptians. They're waiting for it to start going down. They're waiting for the inflation to go down, not to stabilize. And that will then, Egyptians would feel the fruits of this painful austerity measures. When will this happen? Experts and the government are saying this is expected in 2018. Even the IMF said by the end of 2018, inflation could even reach 10% or even less than 10%. So will this happen? Once it happens, we can talk about the Egyptians feeling the fruit of these austerity measures. But at this point, it's all good numbers for the government, all good numbers for businesses, but not yet good numbers for the ordinary Egyptians.
Indeed, of course, base effects kicking into effect, among other things, sometime next year. We'll leave it there for the time being. That's Yasser Kim, there live in Cairo.